Hey everybody, Tim Joy here, your real estate agent for Bellevue, Eastside, and the greater Seattle area. It's April 2026, so let's catch up on the latest in the local housing market and what trends I'm seeing heading into the next few months. Let's start with a quick recap of what happened in March 2026. According to the Northwest Multiple Listing Service, the median sold price for homes came in at $640,000. That's an increase from February's $620,000 and a 1.5% drop from 12 months ago. For median sales price for new construction, we're looking at $750,000, which is unchanged from last month and a 0.9% drop from last March. For new listings, we add about 10,000 new listings, and that's a big increase from February's 7,400 and a 9.5% jump from 12 months ago. As for the total available inventory, we're looking at about 15,000, and that's an increase from February's 13,000 total listings and a 29.3% increase year over year. For pending listings, we're looking at about 7,000 residential and condo listings that went pending, and that's an increase from February's 5,900 and a 3.2% drop from a year ago. Now, for month of inventory, which is defined as how long it takes to sell every home that is active in the MLS inventory, we're looking at 2.78 months. And that's a decrease from February's 3.22 months and a 29% increase over 12 months ago. A neutral market should have 4 to 6 months. So that's the market update. What do all these numbers mean? Where's the market heading to? Before we start, full disclaimer, these are just my personal opinions and not financial advice. With that out of the way, let's get into what's going on with the market. Looking back at last month's activity, the housing market continues a trend that we have been tracking since the start of the year. Inventory is rising rapidly, while buyer demand remains constrained by higher mortgage rates. Active listings jump approximately 30% year over year, pushing total inventory to over 15,000 houses statewide, a significant increase in available supply and one of the highest levels in recent years. At the same time, while new listings continue to come onto the market, they were being absorbed more slowly as pending sales declined compared to a year ago, reflecting a pullback in buyer activity as rates move higher again after February's brief dip. This widening gap between supply and demand is starting to show more clearly in overall market performance. Closed sales remained relatively flat, and while home prices are still holding on a year-over-year basis, the pace of price growth has moderated noticeably. In practical terms, buyers are becoming more selective, focusing on homes that are well-priced and move-in ready, while listings that are even slightly overpriced are experiencing longer days on the market. With inventory now at these elevated levels, sellers are facing more direct competition than they have in the past few years. Looking ahead, the market is becoming increasingly influenced by broader economic conditions. With disruptions to oil shipping through key routes in the Middle East, energy prices have risen, adding pressure to inflation and contributing to the recent increase in mortgage rates. If rates remain elevated, we can expect inventory to continue building while buyer demand stays cautious, leading to longer market times and increased price sensitivity. While a drop in rate could bring buyers back in short bursts, as we saw earlier this year, the overall trajectory points towards a more balanced and gradually shifting market. So, what do all these mean for buyers and sellers? Well, for buyers, this creates opportunity. With inventory at elevated levels and competition easing, buyers have more time to evaluate options and greater ability to negotiate on price and terms. However, mortgage rates remain the key variable. So timing and financing strategy continues to play a major role in affordability. For sellers, success in this market requires precision. With rising inventory and more selective buyers, pricing correctly from the start and presenting the home in its best possible conditions are critical. Homes that align with current market expectations are still selling, but those that miss the mark are seeing reduced activities and longer timelines. And if you're thinking about making a move, whether buying or selling, let's connect. I love to put my experience in the Seattle area market to work for you and guide you through the opportunities we're seeing right now. That's it for now. If you enjoyed this update, please hit that thumbs up, subscribe, ring that notification bell, and share. Good luck out there, and I'll see you next time.